Anil Modi. What could be a combination of leading indicators, if there is a fall in the market?
There could be many indicators. There are things which people talk about, that if the market cap or market capitalization of all the companies exceeds the GDP of the country, it could be one. High PE ratio than the historical high, and if it exceeds a certain range, going above its own median of last 5 years, it's time to worry. That market is so expensive that it will correct.
Right.
If the companies, price earning, if the earnings yield of all the companies or the aggregate companies come to a point where it looks unjustifiable, it could be a reason to worry. There are some anecdotal things, that if you see the stock market hitting the headline in a mainstream newspaper, if it is the headline in a Hindustan Times or a Times of India, then it is time to worry, because or when your neighborhood guy, when your panwala actually starts talking about stock market, it's time to worry. But some of it could be true, but none of it can be conclusively said about that this is the signal when you should worry, because there are just too many moving parts. There are just too many moving things. Markets can remain expensive for a long period of time, and you might have many of these signals pointing to that, okay, market is overheated, it should correct, but it may not correct, and that is what investors have been doing for the last 1.5 years. Also, market is a very dynamic thing. Markets might look expensive, and companies do well, and they earn more money, and suddenly, on the same valuation, if you might look at 500 rupee, if a company is making 50 rupee, it might look expensive, that it is 10 times to its earnings. But suddenly the company starts making 200 rupees, and it starts looking cheap even at 500. So because everything is changing. Also, interest rates coming down can actually make stock market look, or the equities look expensive. If my risk-free return is 10% and it comes down to 6%, then at the same price, everything will look expensive, because the risk premium, what I was able to earn without taking any risk has come down. So there are many things. Nothing can be said conclusively.
What about the geopolitical scenario?
Geopolitical scenarios, I would say that most investors should look at these things as news. Should take note of it, but don't try to profit from it, because you should try and work on, I look at everything I divide every factor into two parts. Something in which you have a say. You don't have a say on the geopolitical scenario. You don't have a say in many of the things, the aggregate numbers. But you have a great say in terms of the kind of money that you are investing, your investment time frame, your discipline, your regularity. If you are going to invest your short-term money in the stock market, you are doomed. You could be in for nasty surprises. But if you are investing your long-term money, absolutely no problem. If you are regular about it, you eliminate the possibility of catching a market high. That's extremely important. Catching a market low, this geopolitical, domestic economy, domestic turbulence, the disruptions, the GST, this, that, I think, investors should, once you have your own variables in place, the controllables, on which you have greater control, then you have to work on one thing, that future will be brighter than now. That actually drives the stock market. If in 5 years' time, good companies will make more money, you will be well off. In the short run, there will be a lot of anxiety. There will be demonetization, people stop selling, there will be doomsday, prophecies. People will say that stock market is going to will come to an end. There will be a downward circuit, market will go down by 12% in a certain day. There will be all kind of things. There could be political anxiety. Which government will there be continuity? Will there be turmoil? And but will we be better off 5 years from now, 10 years from now? I think so. We have seen the recent changes. If you look at the Reliance Jio and something changing, a lot of two big companies in trouble, and the third company, the challenger, incumbents in trouble, and the challenger thriving, and and consumers benefiting. Likewise, we have seen the turmoil across industry. Many companies are still struggling. So, but is it going to be a better future? Will companies thrive and dominate some marketplaces, and will investors benefit from it? I think so. Okay. That should it's a general belief in our economy.